Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Airbnb, ticker symbol ABNB. We're looking at it on the 10-minute time frame because they're just reporting earnings, and we're going to be listening to that call. So I just started the stream about 15 minutes earlier than the call is going to begin, just in case there's some troubleshooting that I need to do with audio. But yeah, I just wanted to be looking at the chart and, kind of to facilitate those who are interested to be able to participate and listen in on their earnings call. And so it does look like, as far as I understand, that they had good earnings. I'm actually not really sure. We did get a spike up in the first 10 minutes after hours, going up about 3%. Actually, going up more than that. This candle here, almost 10%, going up to $67.20. It does look like we're seeing a little bit of a pullback, so that might just be a little bit of a reality check. But maybe this green candle is, foreshadowing for what is to come regarding earnings. And, just before I, do get into the call and get into that, I do just want to throw this up. If you are new to the channel, if you do enjoy this kind of content with me streaming earnings calls, make sure you like the video and always share your thoughts, whether that's in the comments or in the live chat. That's what this channel is all about, learning from the charts, doing that together. And, also, of course, make sure you subscribe. I will hopefully be doing more earnings calls. I should be doing Coinbase's on Thursday, so I will post a link for that later, and then I will be doing AMC's earning call, and then I might do some other earnings, but probably in the morning because my work schedule is changing a little bit. But yeah, we can see here that it is up, about 4% in the after hours, but it does look like we're getting some pushback. So I think that's going to be pretty interesting to see. And yeah, and I should have the call all set up. I believe I just need to hit the call button to connect. But this is the first time I'm doing this from a call and not a webcast, which I've done for Palantir and PayPal. Both were different platforms, and so now I'll be doing the call via FaceTime, just an audio call. But I think it should be nice to be able to not only listen into them, but also see what's going on with the chart. We can also check out some of the news tabs that are up here as well while we wait. And so, yeah, let's see. Q1 revenue above street estimates. Yeah, so it seems like the earnings are probably going to be pretty good. But I can, click on some of these links. I might just click on this one. Sometimes they pop up in Chrome, pop-up window. Other times they're right here in the Webull app, so that's kind of nice to see. So let's see what it says. Airbnb has posted a shareholder letter containing its fourth quarter and full year 2023 financial results on its investor relations website. So we could actually go there if you'd like. Audio call, it's starting at 1:30 p.m. Pacific, 4:30 p.m. Eastern. Yeah, I would like to see longer green candles as well. But I think, this, I imagine, is just, the beginning before we start to hear them talk about earnings and stuff. And, here, let's see. I might just exit out of this. I might switch back to the daily just to see where we're standing. And so, especially like with what's gone on in the market today, I've just seen a lot of red. I think it's pretty good that Airbnb has had a green day. Going up, while red relative to the previous day's close, price has gone up, so I do think that's good. Seeing that green candle, but down almost 2% on the day. So maybe I should be framing that differently. That it was a red day, but the movement during the day was green. But we're still above the neckline, and so I could see this still being strong as long as, we are holding above this red line, which is, let's see, right around $145, maybe $144. And so, it's quite possible we might see a gap down. Yeah, it does look like it's gone down in the after hours so far. But, as long as we hold this neckline, I do think that inverse head and shoulders pattern could still be in play. But yeah, I mean, it's just a tough day to have earnings because it seems like there's so much red in the markets. Yeah, looking at that. Yeah, so I mean, there's going to be volatility leading up to the call. There's just like uncertainty in that. Um, and yeah, I mean, from what it looks like, I see the word beat here. So yeah, I mean, they beat on earnings, but at the same time, that can be, um, can kind of be a sell the news type of thing, selling at the top. Let's see. Oh yeah, this is something we could listen into. And I could actually pull up. Let's see. I've got. I believe I'll have to go over here. So let's see. From, I believe this link. I actually don't know if I can copy the text from these. Let's see. Yeah, so I can go to this, and maybe we can pull up. Oh. What was that link? Man, what's going on here? All right, going from here to here. And that is investors.airbnb.com. Yeah, but I think, Ding, I think that it might still be making a huge jump after the earnings call or perhaps during it. And I think probably like their tone will probably have a big effect on it, just like when Jerome Powell talks. It's really just the tone, the confidence. And so that might be a factor here. And so, yeah, but I mean, it also could be, selling the news type of situation or something. But yeah, I mean, with so much red, I don't have the other tickers up here, but just seeing so much red on the day that, we didn't like the gains that were made yesterday. I mean, yesterday opened at 148.68. We're above that in the after hours now. Actually, it's gone green in the after hours. So looking at the 10-minute time frame, yeah, so there's just a lot of indecision here. And I think that's pretty typical. But yeah, I mean, regardless, really, as long as they're above this neckline, I think that's showing a lot of strength around the news and the reactions that we've seen in the markets broadly. But yeah, here it says issued the fourth quarter. I'm just going to skip over that. So Brian Chesky has said 2023 was another incredible year for Airbnb. Our host community surpassed 5 million for the first time. We delivered nearly 200 new upgrades to our core service, and we ended the year with our highest ever number of global active listings. So, just a lot of growth. And then overview of Q4 and full year results. Airbnb ended 2023 with another strong quarter. In Q4, nights and experiences booked totaled 99 million, growing 12% year over year and marking our highest fourth quarter ever. Revenue of 2.2 billion grew 17% year over year, with an approximately 14% ex FX. I'm not sure what that means exactly. Q4 net loss was 349 million, and excluding non-recurring tax items, adjustable net income was 489 million, our most profitable fourth quarter. So that's great. Adjusted EBITDA of 738 million represented a 33% adjusted EBITDA margin, up 6 percentage points from the prior year. And over the past year, we've also made significant progress across our strategic priorities. We're excited to share our results along with how we'll continue investing in these areas in 2024. And so I'll just read the bold here, and then I'm going to try to get on that call just to make sure. Yes, I will definitely look at GDX and AAAU. So that's gold mining index and gold. Um, yeah, I guess not really surprised by I guess I've been surprised by both of those a little bit. But GDX, from a recent stream, I did go over a gold mining company, and I did note that it looked like it was kind of breaking a neckline or something, breaking support, and that did seem to come down today. So that's not terribly surprising, but I was kind of under the impression that gold miners would be strong longer term. And so this might just be kind of a short term drop. But yeah, so just reading this bold print here. So making hosting mainstream. So I imagine they'll be talking about this on the call, which I'll connect in just a minute. And then perfecting the core service and then expanding beyond the core. And so for me, in my experience with Airbnb, I've really just done, the stays. I haven't done the experiences. So I do think that is, an area, at least for me, that I haven't explored that much. So I think there's a lot of potential there. But yeah, I should have it connected in my and hey nameless, how's it going? And hey ding, how's it going? Sorry if I don't say hi. I'm still getting used to the norms of streaming and stuff. But yeah, I'm gonna try to connect to the call, and you can let me know if audio sucks. But it should be connected. And actually, I'm gonna unplug myself from the mic, and so I can hear what we're listening to on the phone call. So yeah, let's see. Oh, okay, so my phone is not okay. I have to mess around with my phone. It's possible we'll have to listen to it directly from my phone, and I can just put the mic up to it. But let's see. Oh, man. Yeah, I might have to do it from my phone, so it might be a little tricky. And so I'm just going to make sure that I have the number here, and then I'll put the mic up to the phone, and then we'll have to see about that. So a little bit of technical issues, but I should be able to figure this out. Oh. Yeah, and also I do have a holiday on Monday, so I don't have to go into work, so I can stream then. So that should be nice. But yeah, I'm just going to pull up this phone number, dial it in on my phone, and then you guys can let me know how the mic sounds, and I'll be quiet during it. Let's see. I'm just going to try and copy and paste it from my computer. All right, that's magic.
Welcome to the conference center. Please enter your conference ID and press the pound key.
All right, what's my ID?
Please wait. The conference will begin shortly.
I might actually put this on mute. I just don't want to get a copyright strike for sound or something, the music. But yeah, I'll try to...
Airbnb's earnings conference call for the fourth quarter of 2023. As a reminder, this conference call is being recorded and will be available for replay from the Investor Relations section of Airbnb's website following this call. I will now hand the call over to Angela Yang, Director of Investor Relations. Please go ahead.
Good afternoon, and welcome to Airbnb's fourth quarter of 2023 earnings call. Thank you for joining us today. On the call today, we have Airbnb co-founder and CEO, Brian Chesky, and our Chief Financial Officer, Dave Stevenson. Earlier today, we issued a shareholder letter with our financial results and commentary for our fourth quarter of 2023. These items were also posted on the Investor Relations section.
Just let me know how
of
sound
Airbnb's
is, and I'll
website.
try to adjust it.
During the call, we'll make brief opening remarks and then spend the remainder of time on Q&A. Before I turn it over to Brian, I would like to remind everyone that we will be making forward-looking statements on this call that involve a number of risks and uncertainties. Actual results may differ materially from those expressed or implied in the forward-looking statements due to a variety of factors. These factors are described under forward-looking statements in our shareholder letter and in our most recent filings with the Securities and Exchange Commission. We urge you to consider these factors and remind you that we undertake no obligation to update the information contained on this call to reflect subsequent events or circumstances. You should be aware that these statements should be considered estimates only and are not a guarantee of future performance. Also, during this call, we will discuss some non-GAAP financial measures. We provided reconciliation to the most directly comparable GAAP financial measures in the shareholder letter posted to our Investor Relations website. These non-GAAP measures are not intended to be a substitute for our GAAP results. With that, I will pass the call to Brian.
All right, thank you, and good afternoon, everyone. Thanks for joining. I am excited to share our results with you. We wrapped 2023 with another strong quarter. We had 99 million nights and experiences booked in Q4, marking our highest fourth quarter ever. Revenue of $2.2 billion grew 17% year over year. Net loss was $349 million, but when excluding non-recurring tax items, adjusted net income was $489 million, representing an adjusted net income margin of 22%. For the full year, our free cash flow is $3.8 billion, our highest ever. Because of our strong cash flow and balance sheet, we repurchased $2.25 billion of our shares during 2023. And I'm excited to announce that today, our board of directors approved a new share repurchase authorization of up to $6 billion of our Class A common stock. Our strong results in 2023 were driven by our focus on three strategic priorities: making hosting mainstream, perfecting our core service, and expanding beyond the core. First, we're making hosting mainstream. We've been focused on making hosting just as popular as traveling in Airbnb. Our results show that our approach is working. In Q4, our host community grew to 5 million hosts around the globe. Active listings exceeded 7.7 million by the end of 2023, increasing 18% year over year. And we also saw sustained double-digit supply growth across all regions. All in all, in 2023, hosts earned more than $57 billion. This year, we are going to continue to raise awareness around hosting and improve the overall host experience. Second, we're perfecting our core service. Over the past 3 years, we've launched more than 430 new features and upgrades to our core service. We've made significant improvements to make Airbnb a more affordable and reliable option, and we are already seeing a positive impact. For example, host cancellations have decreased by 36% in Q4 of 2023, and this is compared to the same period a year ago. And now, 2/3 of our hosts offer a weekly or monthly discount. We will never stop perfecting our core service. In the year ahead, we'll remain focused on improving the quality and reliability of stays. Finally, we are expanding beyond the core. Airbnb is at an inflection point. We spent the last 3 years perfecting our core service, and we are now ready to embark on our next chapter. We're focused on unlocking more growth opportunities by investing in underpenetrated international markets, and we're seeing some great results. Following the success that we've seen in recent quarters in Germany, Brazil, and Korea, we're now rolling out our playbook in other countries, including Switzerland, Belgium, and Netherlands. But this is only one piece of a much bigger strategy, because we've always believed that Airbnb was destined to offer more than just a place to stay. And now is the time for us to expand beyond our core business and reinvent Airbnb. And there are a few reasons why. I mean, first, We want people to love our core service before offering them something new. And with hundreds of improvements we made over the past 3 years, the Airbnb service is now better than it's ever been. Second, we've been able to attract some of the best talent in the world, and we now have the capabilities to do so much more. And third, there is a new platform shift with AI, and it will allow us to do things we never could have imagined. While we've been using AI across our service for years, we believe we can become a leader in developing some of the most innovative and personalized AI interfaces in the world. In November, we accelerated our efforts with the acquisition of Game Planner AI, a stealth AI company led by the co-founder and original developer of Siri. With these critical pieces in place, we're now ready to expand beyond our core business. Now, this will be a multi-year journey, and we will share more with you towards the end of this year. Now, looking back on Q4, we also saw a number of very positive business highlights. First, we surpassed 5 million hosts on the platform and saw meaningful supply growth across all regions. We had a nearly 1.2 million listings in 2023, ending the year with over 7.7 million active listings. Q4 supply growth grew 18% year over year. Now, this is a real highlight. We saw the highest growth in regions with the highest demand. So obviously, there's a real strong network effect happening here. We also continue to see relatively similar supply growth among individual and professional hosts, with the majority of these listings exclusive to Airbnb. Now, second, we continue to see strong demand on Airbnb. Now, this is especially true amongst first-time bookers, which is particularly encouraging. Nights and experiences booked grew 12% compared to a year ago, and following some volatility in October, nights booked actually accelerated throughout the remainder of the quarter. And Q4 also marked the highest quarterly growth rate of the year for first-time bookers. And additionally, we also gained momentum in app downloads and app bookings. 55% of gross nights booked were on our app. This is up from 50% a year ago. And finally, we're driving affordability for guests. Throughout 2023, we introduced several features to make Airbnb more affordable, from new pricing tools for hosts to increased pricing transparency for guests. Since launching these features, we've seen 1.4 million hosts use similar listings, which lets hosts compare the price of their listing to others in the area. Nearly 300,000 listings have removed or lowered their cleaning fee, and by year end, nearly 40% of our active listings didn't charge a cleaning fee at all. So our work around affordability is paying off. In December, the average nightly price of a one-bedroom listing on Airbnb was $114 a night. This is down 2% from the same period last year, while hotel prices rose 7% to $149 over the same period. Now, before I turn to Q&A, I want to share the latest on 2 executive updates we announced at the end of last year. To start, Dave Stevenson is now Airbnb's first Chief Business Officer. Over the past 5 years, Dave's done an incredible job as CFO, and our business is stronger than ever. One of the qualities that is so remarkable about Dave is that he's not just a world-class finance leader, he's also a world-class operator. And whenever I need someone to quickly drive a complicated series of operations together to a clear outcome that doesn't compromise our values, I turn to Dave. As we expand beyond our core, it will be paramount to have an executive dedicated to our long-term growth plan. And there is nobody better than Dave to do this. Dave will continue to drive growth across existing and new businesses, and this includes driving international expansion, growing global host supply, and leading all business and corporate development activities at Airbnb. Now, as Dave takes on this position, I am thrilled that Ellie Mertz will be our CFO. You see, Ellie's been my right hand for 11 years, and many of you already know her and are well aware of her impressive track record at Airbnb. She led our IPO during one of the most pivotal moments in our company's history. And for the past several years, Ellie's overseen strategic finance and analysis, corporate development, and investor relations. And under her leadership, our company grew from adolescence to adulthood, with revenue growing over 100x. I am thrilled that she's stepping into this role. Dave has already started as Chief Business Officer, and Ellie will officially transition to CFO on March 1st. So next call, you will hear from Ellie. Before we go to questions, I'd just love to hand over to Dave and share a few thoughts. Dave?
Yeah, thanks, Brian. I'm really excited about my new role as Chief Business Officer. In this role, I'm focused on driving Airbnb's growth by concentrating in three specific areas. First, continuing to grow our high-quality supply of stays and experiences around the world. Second, leading our global expansion efforts in under-penetrated countries. And third, developing and launching new businesses as we expand beyond the core. As Brian has said, this is a transformational year for Airbnb. I look forward to Ellie becoming our CFO next month. I couldn't think of a better person to lead us into the next phase of growth. And so with that, let's open up the call for Q&A.
At this time, I would like to remind everyone, in order to ask a question, press star, then the number 1 on your telephone keypad. We ask that you please limit yourself to one question only. Your first question comes from the line of Ron Josie from Citi. Your line is open.
Great, thanks for taking the question. Dave, congrats on the role, and Ellie to you as well. Brian, I wanted to ask a little bit more on just expanding beyond the core. I think you said now is the time to do it and to stay tuned towards the end of the year. But then you also talked about being a leader in personalized AI. Can you just give us a little more insights on how you're thinking about AI given the acquisition of Game Planner? And then as we think about these newer under-penetrated markets, Switzerland, Belgium, Netherlands, talk to us about just lessons learned from, call it, Germany, Korea, Brazil, that you can apply to these newer markets. Thank you.
Yeah, absolutely, Ron. Thanks for asking the question. So let me start with AI. So I think to talk about AI, it would be good to zoom out, just lay out the landscape. One way to think about AI is, let's use the real-world metaphor. I mentioned we're building a city. And in that city, we have infrastructure, like roads and bridges. And then on top of those roads and bridges, we have applications like cars. So Airbnb is not an infrastructure company. Infrastructure would be a large language model, or obviously GPU. So we're not going to be investing in infrastructure, so we're not going to be building a large language model. We'll be relying on, obviously, OpenAI. Google makes a great model. Meta great models. So those are really infrastructure. They're really developing infrastructure. But where we can excel is on the application layer. And I believe that we can build one of the leading and most innovative AI interfaces ever created. And maybe one way to make this real is if you were to open, say, ChatGPT or Google, though the models are very powerful, the interface is really not an AI interface. It's the same interface as the 2000s in a sense. The 2010s, it's a typical classical web interface. So we feel like the models, in a sense, are probably underutilized. Here's another way of saying it. Take your phone and look at all the icons on your phone. Most of those apps have not fundamentally changed since the advent of generative AI. So what I think AI represents is the ultimate platform shift. We had the internet, we had mobile. Airbnb really rose during the rise of mobile. And the thing about a platform shift, as you know, is it's also a shift in power. It's a shift of behavior. And so I think this is a 0-0 ball game, where Airbnb, we have a platform that was built for one vertical, short-term stays. And I think with AI, generative AI, and developing a leading AI interface to provide an experience that's so much more personalized than anything you've ever seen before. Imagine an app that you feel like knows you. It's like the ultimate concierge. An interface that is adaptive and evolving and changing in real time, unlike no interface you've ever seen before. And that would allow us to go from a single vertical company to a cross-vertical company. Because one of the things that we've noticed is the largest tech companies aren't a single vertical. And we studied Amazon in the late 90s, early 2000s, when they went from books to everything. Or Apple, when they launched the App Store. And these really large technology companies are horizontal platforms. And I think with AI and the work we're doing around AI interfaces, I think that's what you should expect us. We're not going to talk specifically on this call about the specific products and services we're going to be offering, but you will see some very big announcements later this year. And as you know, we did an acquisition of Game Planner AI. It was from the creator Siri, and that was just accelerating the efforts we were already endeavoring on.
Your next question.
So the question was, newer under-penetrated markets. So we've learned a few things. First, we just need to make sure that we have great supply in specific nights. So even the subtleties of local holidays and ensuring that we're there. So we have it at all price points. Different countries have different expectations on what the supply growth looks like. And then just making sure we have the right product. Things like we've done include installment payments in Brazil and Latin America, neighbor login in Korea, just making sure that we're showing up locally in the ways that they're expecting. And then the third is just to make sure we have a full funnel marketing approach. In some of these countries, we're now big enough where we can have a small team do very targeted social marketing, PR, communications, use influencers, search engine marketing, but build that on top of brand marketing. Have that all work together in one full funnel approach. More than approximately 90% of our traffic remains direct or unpaid because the majority of Airbnb stays are unique to us. And that continues to drive the flywheel. But having this full funnel approach is very effective when we implement it on the ground in these countries.
Your next question comes from the line of Eric Sheridan from Goldman Sachs. Your line is open.
Thanks so much for taking the question. I was curious how the building blocks of sort of the way you're thinking about the macro environment and the idiosyncratic growth the company sort of is looking at for Q1, driven by elements both supply and demand, and what you see as sort of the exit dynamics from 2023. Thanks so much.
Again, what we saw exiting 2023 was interesting, right? When we were on this call a quarter ago, we had seen some softness in demand in October. And so we guided to that kind of expectation. And then what we saw is accelerating demand in November and December. And then as we come from that strength, 17% kind of revenue growth and 12% nights growth in the fourth quarter, we're seeing really stable demand coming at the start of the year. You have to actually rewind the tapes and remind yourself that we were just exiting kind of Omicron, and there was a lot of pent-up demand in January of last year, which makes for some harder comps in Q1. But against those harder comps, we continue to see, strong demand for travel. I think that we continue to see a very robust demand for people staying on Airbnbs versus just necessarily kind of buying other things. So the experiences over things continues to be a big trend. And we're excited to see the growth that we're continuing to see in our established businesses in North America and Europe, and even greater growth in Latin America and Asia Pacific. So as we do things, as I said on the last question about doubling down and making sure that we invest in these expansion countries where we're underpenetrated, I think that's going to continue to drive growth for us for the rest of the year.
Your next question comes from the line of Justin Patterson from KeyBank. Your line is open.
All right. Thank you very much. There's been a lot of investor interest around the cross-currency fee. How should we think about that phasing in over the course of the year and the potential financial impact from that? And then further, could you talk about just why you viewed now as the right time to pull that lever? Do you view this as a sign that you'll take pricing actions where there's a value disconnect more regularly than in the past? Thanks.
Yeah, to be clear, when we announced this recently, we kind of updated our terms of service. And what it did is it gives us the ability to implement a cross-currency fee. So we needed to update the terms of service just to allow us to do it. Now, the fee only applies when the currency of the guest uses to pay differs from the currency that the host set for their listing. So we don't anticipate this fee to affect the majority of our guests because the cross-currency transactions are only approximately 20% of our gross booking value. It's different than our cross-border, which is closer to 40%. And we anticipate the majority of the fee changes to be closer to 1%. So we're going to test and evaluate and just see what the results are. And that testing will begin in April. Why now? There's just a point where we understand that the size and complexity of our business ensures that we should be making sure we're providing great value to our guests and our hosts. We did things like last year, we had a change to our long-term stay fees for beyond 3 months. That was an opportunity where we saw that maybe the fees were too high relative to the benefit we're giving. I think there's just a fundamental principle where we want to make sure that we're giving more value to our guests and our hosts than we take in our take rate over time, and we're going to continue to be more nuanced in how we make those choices going forward.
Our next question comes from the line of Brian Nowak from Morgan Stanley. Your line is open.
Great. Thanks for taking my questions. I have two, one big picture and one sort of accounting. So big picture one, you guys have made a lot of interesting changes to the U.S. around I'm flexible and new tools for hosts, et cetera. Brian, can you just sort of talk to us about areas of progress you've made on improving conversion or getting hosts to lower prices in the U.S. and sort of what are the existing hurdles you have to overcome to kind of get power hosts and hosts to kind of lower prices more in the U.S.? And the second one, Dave or Ellie, if there's a lot of moving pieces around this 1Q guide, if we're sort of thinking through gross bookings versus revenue and we're getting to room night growth in sort of the mid to high single digits, is that right? Or are there sort of other moving pieces that we're missing around the room night growth calculation? Thanks.
Yes, when I start, Brian. So you could think of probably like three really big buckets of work that are going to drive conversion of Airbnb. One is our work on affordability. The next is really product optimization. And the third is really quality and reliability. So let me talk about all three. And I'll start with affordability. You know, a couple years ago, we noticed that there was quite a lot of feedback we were getting from our guests that Airbnb was getting more expensive. And so last year, we really hunkered down and rolled out a suite of tools for guests and hosts to make Airbnb more affordable. Starting with total price display, where you now can turn on a toggle and see the total price up front, including taxes and cleaning fees and service fees. Now, this tool is really important because now we're pushing more demand to listings with better prices. We've also seen some really positive knock-on effects. For example, 300,000 listings have now reduced or eliminated their cleaning fee, and 40% of listings don't even have a cleaning fee. The next thing we did is we encouraged more hosting to provide discounts for weekly or monthly stays. As you know, 19% of our nights are monthly stays, and more than 40% are weekly. Well, now 2 out of 3 hosts have a monthly or a weekly discount. So this has been a huge, huge improvement. And we also launched a product called Compare Listings. One of the things we noticed is that hosts are more likely to have a competitive price if they see what other similar listings are charging in their neighborhood, and then they can see whether they're getting booked or not. Well, since we rolled out that tool, 1.4 million hosts have turned the tool on, and this means they'll provide more competitive listings. The result of which, Brian, is that our prices year over year for one-bedroom apartments globally are down 2%, where hotels are up 7%. That's a 9% swing. The next is product optimization. Here's a simple way to think about it. We did $9.9 billion of revenue last year, so let's round that to $10 billion for really simple numbers. All we have to do is increase our nights booked by 100 basis points, and that's $100 million of revenue. And if we can increase $100 million of revenue, it'd be $100 million of very high margin revenue because, we're converting presumably traffic we already have on the website. And so there's a number of things we're doing on product optimization to increase conversion rate. One of the big things, as you noticed, is I'm flexible. Here's a simple way to think about it. We are never close to sold out in Airbnb. If we can just point demand to where we have supply by getting people to be more flexible about their dates or a little more flexible about their radius or the location, that'd be massive. We also made some optimizations to get more people to download our app. And now we are, very typically a top 50 application in the United States. And now 55% of our bookings are now on a native application. So those are some of the things that are on product optimization. The last thing I'll talk about is reliability. We launched guest favorites. Guest favorites, the reason we launched this is for every person who stays in a hotel, 9 people stay in an Airbnb. For every person who stays in an Airbnb, 9 people stay in a hotel. What if we could get just one of those people who stays in a hotel to stay in an Airbnb? We would quite literally double the size of our business. So when you ask people who book hotels why they don't book Airbnbs, there's 2 reasons. One, well, it's habitual. They've always booked hotels. And the other is they are comforted by the reliability, the consistency of the hotel experience. And we asked, what if we had a product that was as consistent as a hotel from a quality standpoint, but had all the unique advantages of Airbnb? It was more affordable, it was more unique, with more character, and it was better equipped. And that's exactly what guest favorites are. They're 2 million of the best listings on Airbnb based on rating, review, and reliability data on 500 million trips on Airbnb. Since we launched launched that product in November. We are seeing a shift in bookings towards guest favorites. That's of course good because number one, they get fewer customer service contacts, so customer service costs go down. They have higher 5-star rating trips, so we have better repeat bookings. And we think this will attract people to Airbnb that never considered us before. So those are just some of the things we're doing. The last thing I'll say before I hand it over to Dave is that's just what we did last year. We had about 200 upgrades last year, 430 in the last 3 years, but we are just getting started, and we're going to have significantly larger upgrades this year. Dave?
In terms of the Q1 guide on room nights growth, again, I think you have to remember that we have a hard comp versus Q1 of 23, where there was a lot of pent-up demand coming out of the holidays, and we saw much stronger growth early in the year, especially in January. I think the other thing that's unusual about Q1 this year is Easter moved from Q2 to Q1. So this actually helps our revenue by 100 to 200 basis points in Q1, but actually is a drag on nights because we actually get fewer nights booked in the period as people are actually doing the traveling on holiday. So we'll shift some nights from Q1 to Q2. So revenue is a little bit helped Q2 to Q1, and bookings, nights booked are slightly hurt Q1 to Q2, and then don't forget the hard comp. So this is why we have the language of moderating from 12% growth in Q4.
Your next question comes from the line of Doug Anmuth from JP Morgan. Your line is open.
Thanks so much for taking the question. Ellie, can you just help us understand the commentary on EBITDA a little bit better for 24, or the incremental investments that could drag on the margins? Is that primarily about expanding beyond the core and tied to some of the new initiatives that Brian talked about that we'll learn about later this year, or is that more around marketing or just something around kind of the existing business? Thanks.
Thanks, Doug. I was actually going to start next quarter, but thanks for pointing it to me. So what you saw in the guidance language that we provided is that we are basically giving ourselves a floor in terms of the full year EBITDA margin guidance. As we said, we will hold or provide a minimum of 35%, which is slightly down from what we delivered in 2023. The intent here is really to ensure that we have flexibility over the course of the year to continue to invest in a variety of growth opportunities here. So what might those be? So first, we have a pretty robust budget in terms of our international expansion, but there's certainly opportunities at the margin to continue to invest in your market. Second, there's always opportunities in terms of looking at our high ROI marketing channels and adding marginally at the top. Third, what we know, given the ambitions around our product development roadmap, is that's obviously often constrained by our resources there, and so we may look to add incremental product resources to increase the throughput of our overall product team. And then finally, obviously, we haven't said much with regard to what the platform extensions will look like in the back of the year, but we also want to give ourselves flexibility there to ensure that we're able to share something broadly and meaningful by the end of the year.
Your next question comes from the line of Justin Post from Bank of America. Your line is open.
Great, thank you. Just want to ask about room nights. We all know there's a tough comp in Q1, and that was partially due to the reopening, but we're kind of over COVID now, and just kind of thinking about where you are in the room night cycle going forward, and what are the key drivers for nights? Is it growing supply and just getting that conversion level better? The big picture, just saying, it looks like a tough comp in Q1, but how do you think about the rest of the year and where nights can grow over the medium term? Thank you.
Yeah, again, we are starting to see overall kind of demand normalize. I think you also look at our nights growth and the nights on Airbnb, to continue to see that we take share of overall accommodations globally versus kind of traditional accommodations, and are either equaling or exceeding versus our key competition. So I think if you just look at room nights growth, we continue to see strength relative to the traditional hospitality and our competition. And you're exactly right. The key focus is around supply. There's been a lot of critique around whether or not we have sufficient supply growth. I hope that we continue to show that strength with the 7.7 million active listings. They're growing 18% year over year. We saw incredible strength throughout the year. 5 million hosts, vast majority of those listings being unique to Airbnb. And I think that uniqueness also gives us a lot of the strength on, as you say, conversion and a lot of the things that Brian talked about in terms of perfecting price, making it easier to shop and find the right home for each guest is incredibly important. So perfecting the core service is there. And then the last piece, which we've also talked about, is just finding the areas where we are under-penetrated relative to where the opportunity is. And I think that's the vast majority of countries around the world. And when we make sure to apply a product view, a marketing view, a supply view in a targeted way in each country, we're unlocking incremental growth. And that's what we've seen, why Brazil has nearly doubled since 2019. So, yep, it's supply, it's product, it's full funnel marketing, and it's doubling down in under-penetrated countries.
Our next question comes from the line of Kevin Koppelman from TD Cowen. Your line is open.
Thanks so much. I had a follow-up on the margin question. Could you give any more color and your kind of initial thinking for the year on growing headcount, and also how you're thinking about the marketing plan to support the growth initiatives that you talked about?
Yeah, in terms of headcount, we grew headcount last year about 1%. We're planning to grow it maybe slightly more than that. It could be kind of mid-single digits, a low to mid-single digit percent. As kind of Ellie mentioned, I think we will see, depending on what our product development needs are, but it's not going to be above overall kind of revenue growth. And then in terms of marketing, largely we're going to keep marketing costs as a percentage of revenue largely the same as what it was in 2023. In some ways, we probably could see additional leverage on marketing, but what we've seen is such great success with our brand marketing efforts in our core markets. We're actually expanding to 20 countries around the world, so that's already included in this. And then we'll see as there are other investments to support the newer business areas, but to the extent that there may be any incremental marketing, it's not going to be a materially larger percentage of revenue than it was last year.
Your next question comes from the line of Lee Horowitz from Deutsche Bank. Your line is open.
Hey, can we maybe spend some time talking through sort of the competitive dynamics and your expectations for the competitive set in the U.S. in 2024, particularly as some of your larger competitors look to lean into share gains? Are any of these investments aimed at holding share, or any of the step up investments sort of aimed at defending share against a more competitive environment? Thanks so much.
Yeah, we're going to continue to do what we're doing well, which is have unique supply that is outgrowing any of our competitors. And I think by having that, we were able to drive kind of incremental nights and take share from both traditional hospitality and our competitors. I know competitors are trying to come in to North America and try to take additional share. It's not what we're seeing. We're not seeing success there. We're seeing that a lot of the competition is focused on professional host supply, which is undifferentiated and often cross-listed. And I think the differentiated supply that we were able to bring on has been a material kind of net benefit to us. So that's the strength we're seeing.
And I'll just add that, we have a lot of competition for people choosing places to stay. Our main competition are hotels, first of all. And we're so much smaller than hotels. For everyone who stays at Airbnb, 9 people stay in a hotel. So I think the bigger opportunity is for us to take market share. Because again, all you need is one of them to come to Airbnb, and we've now doubled the size of our business. I think we are only scratching the surface. We grew in every region. We maintained or grew share in every region. As Dave said, we are the brand in this category, a noun and a verb, used all over the world. We are the only ones with a custom-built platform. And we're going to continue to strengthen our advantages, including like guest favorites, the only one to offer that, the only one to offer custom-built tools on the host side. So the best game we can play is to continue to focus on executing ruthlessly. And if we continue to do that, we're going to continue to take share.
Your next question comes from the line of Jed Kelly from Oppenheimer. Your line is open.
Hey,
Great. Thanks for taking my question. Just a couple. Just one. Can you talk about how we should think about demand and supply starting to converge? I know you've had great supply growth, up 18%. Should we start to see room nights catch up to that demand? And then can you just give us an update on the health of the U.S. short-term rental market? How you're thinking about that going into this year after what was softness in a lot of those core vacation rental destinations last year? Thanks.
Yeah, so why don't I just start, Jed, talking about supply growth, and I'll let Dave answer the rest. I believe in the long run that supply growth is a long-term indication of growth in Airbnb. And it's been healthy since we started the company, but you'll know that, during the pandemic, one of the biggest questions I got asked when supply growth stopped is how we're going to restart supply growth. The great thing about our supply growth is that most of it comes organic to us. In fact, 36% of our new hosts were prior guests. That's the highest that number's ever been. And the reason people host is because their friends typically tell them about it. But last year, actually the year before, we actually began, and we really put the throttle on it last year, a new strategic priority to mainstream hosting. And we did a few things. We really focused on making hosting easy to get started and increasing awareness. Now, one of the reasons that we're so excited about the growth being 18%, and we hope it grows even faster, is, as you know, the more supply you have, the more pricing pressure you relieve on the inventory. So when you're supply constrained, what you typically see is prices go up. When prices go up, nice growth is typically, diminished. So we believe that, again, the total addressable market for Airbnb stays is every single person, with very few exceptions, who stay in a hotel. If we can get the right supply at the right price, then we believe we can capture that demand and build a company significantly larger. Additionally, by having a surplus of supply, we think that will allow us to have even tighter quality control. So to answer your question, we do think that the healthy supply growth at 18% could be a great leading indicator down the road of where demand could be. And we'd love for supply to grow even faster.
Yeah, I think what's also interesting is if you actually back up and look out over multiple years, you go back, 4 years or so, and look at the total amount of supply growth versus the total amount of nights growth, it's actually fairly consistent. So there are times that supply leads demand and times that demand leads supply. But I think, as Brian mentioned, over time, those things equalize out, and the greater supply definitely helps our overall performance. I'd say in terms of, U.S. very specifically, a couple of things. We're seeing overall very stable growth in the U.S. We're seeing strong inbound, cross-border growth of nights. And I think, unlike others that we're seeing in the U.S., we've seen very healthy growth in the non-urban markets, right? Urban markets have been traditionally our areas of strength. Non-urban grew, substantially kind of during COVID and coming out of COVID. We've continued to hold really great share and growth in the non-urban areas, and now urban is coming back stronger, and that has been our traditional area of strength. Maybe a last area is our long-term stays. So 19% of our stays were of 28 days or longer in the last quarter. So, it's given up a little bit from the 18% prior to that. I think there's been a lot of critique of, long-term stays, that's a post-COVID benefit that's going to go away. Well, it's still materially bigger than it was back in 2019 when it was closer to 13, 14% of our nights growth. So we're seeing really great strength there. So that's what we're seeing in North America.
Your next question comes from a line of Timothy Shipska from JNP Securities. Your line is open.
Hi, this is Nick Jones on. You talk a lot about, focus on international expansion and being kind of under-penetrated in many of these markets. You're rolling this playbook out, so I think it was Switzerland, Belgium, Netherlands. Is this kind of the cadence we should expect the playbook to kind of continue to expand into additional countries? It's kind of 3 or 4 at a time. I guess, how are you balancing rolling this playbook out to more countries, with kind of these new initiatives that we're looking forward to hearing from later in 2024?
Yeah, I think that's what you'll continue to see is that we're being very judicious about putting small teams on the ground in each of these locales, making sure that we have the full funnel marketing approach working well, establishing what product adjustments might be unique to a specific location that's helpful. And then we're working down our list. What's the largest opportunity? What do we have the capabilities for? And how do we kind of to do it. None of these are, perishable things. We're just kind of working our way down kind of a prioritized list of our capabilities. And then this sets us up well as we expand beyond the core to make sure that we have strong established base of business to kind of build from.
And I'll just add that, I think that there's some massive opportunities in front of us, especially with Asia. We really did focus on Korea, but I think the point that should be made is if you look at our penetration and say U.S., Australia, Canada, France, and to maybe a lesser extent, United Kingdom, they're significantly higher than other parts of the world. In fact, in the United States is more than an order of magnitude higher penetration than Asia. There is no reason why we cannot get to today's U.S. penetration and the equivalent penetration in most of the major tourism markets around the world. And we think we're only scratching the surface in our mature market, or more mature markets. So again, we are going to continue to add these countries one by one. But the other thing is we're just getting started in Korea. We're just getting started in Germany. We're just getting started in Brazil. Brazil is now double the size it was pre-pandemic, but it's going to double again. And so we're going to continue. We have multiple phases of this playbook. And the first phase is playing out in Korea, Japan, and Brazil, but we're going to go on to the next phase as we continue to add more countries.
Your next question comes from the line of James Lee from Mizuho. Your line is open.
Great, thanks for taking my questions. My question is about booking window. I think in 1Q last year, booking window was extended as consumers tried to lock in high prices for accommodation. And just curious of what you were seeing this quarter so far. Are you seeing any differences? Booking window by region also, that would be helpful. Thank you.
Yeah, booking window has been relatively stable. We've kind of come back to a little bit more normal booking windows over time. So there's actually not a lot to say on it. It's pretty consistent now globally as things are returning to more normal state.
Your next question comes from the line of Bernie McTernan from Needham & Company. Your line is open.
Great. Thanks for taking the questions. Brian, just on cross-vertical, when you were talking about the new product initiatives, were you meaning more of like a full OTA and thinking about cross-vertical in travel, or was this more thinking about like Amazon, AWS, moving beyond retail to all industries? And then bringing in more first-time bookers to the platform, any specific drivers there? Is that just international or anything else we should be aware of? Thank you.
Yeah, hey, Bernie. I think that Airbnb can go far beyond travel in the coming years. But I think we're going to start with our core. So I think what we're going to do is start with travel, and then down the road we can move beyond travel. So we should start by seeing us do the things that are the most logical extension of what we already provide, and then we will move further and further out from our core as the things we launch are successful. And then what was the second part of the question?
Well, it's about first-time bookers, and what we see the growth of first-time bookers. I'll start, Brian. You can round it out if I miss anything. But a key part is the reliability, making sure that they feel like we have that the service is going to be reliable. So things like air cover has been an area that we've been promoting to get people comfortable on booking Airbnb. Doing things like reducing cancellations has been great. The work that we've done to make sure that prices are moderating, and then just general awareness, making sure that they're aware of it, which is the full funnel marketing approach we do to a lot of these international countries. We're seeing strong strength in mobile downloads, as we highlighted at the top of the call, and just overall, strong organic trends across the business.
Yeah, I'll just highlight a few things in addition to what Dave said. I mean, first of all, our traffic and our top of funnel results are really good, and one of the reasons why is number one, we're having a really successful advertising campaign. As you know, we have a very different approach to marketing than our competitors. We're not really typically trying to buy customers through performance marketing. We generally, as Dave mentioned, have a full funnel approach, and we think of advertising more as education than sales. And one of the things we noticed was that we wanted to educate people about how there's some trips that are really just always better in Airbnb. If you're traveling with your family, if you're traveling with your groups, being able to share a house and have your own bedroom and save money rather than getting separate hotel rooms or cram in one hotel room makes complete logical sense. And so we have this campaign running. It's called Get an Airbnb. It's the most successful digital advertising campaign we've ever done, and it's now running on television. We also are tapping into the biggest moments of pop culture. Last year, for example, the Barbie movie came out, and we partnered with Mattel to turn a mansion in Malibu into the Malibu Barbie dream house. That became a phenomenon on social media, and it got more press, more articles than our IPO. In fact, 3 times as many articles were written about the Barbie Malibu dream house as Airbnb's IPO, just to give you a sense. So we have a lot of traffic coming to Airbnb. We're going to continue to hopefully stay relevant within culture. And if we can then convert that traffic, as Dave said, to product optimization, reliability efforts, improve customer service, then I think there's a lot of opportunities. And again, we have an entire roadmap where you can imagine, hundreds of basis points of conversion of a nice growth increase through some of these efforts. So we've got a pretty big arsenal of levers.
Your next question comes from the line of John Colantoni from Jefferies. Your line is open.
Great. Thanks for taking my question. Just looking across your regions, EMEA is where you sort of seen the biggest moderation, incremental nights and experiences this year. I know there's some big travel markets where you're still underpenetrated, like Germany and now Switzerland, Belgium, and the Netherlands. Maybe you could talk to why consumer adoption has lagged in some European markets versus others, and any key areas of investments you still need to make to help drive adoption rates higher in that market. Thanks.
Yeah, we continue to see strength in our growth in our more established markets, North America and Europe. But we're actually seeing still stronger growth relatively in Latin America and Asia. And so any kind of moderation is still just coming off of high overall growth. I mean, I'd say APAC, we're really encouraged to see China outbound gathering kind of additional momentum, and we expect by the end of the year, China outbound travel should be above 2019 levels. So I'd say that we're continuing to see great strength, and this international expansion playbook that we have, I think it's going to continue to be a tailwind for growth, especially in Latin America and Asia for the rest of this year.
Your next question comes from the line of Ken Gorelski from Wells Fargo. Your line's open.
Thank you very much. And I'm sure you'll tell us more later this year, but could you talk about how you think about either the build, buy, or partner strategy with respect to expanding beyond the core?
Yeah, absolutely. So I think one of the great things about Airbnb is that most of our innovation and most of our business is developed organically. And that just becomes from our DNA. Like Airbnb was started by 3 product people and engineers, 2 designers and engineer. And Jody and I created this company from nothing with really no capital whatsoever to speak of. So I think build and the organic growth is in our DNA, and it's always going to be our predisposition. That being said, with the scale that we have, having nearly 2 billion guest arrivals and more than 70 billion GBV, that is a huge asset to be able to partner. And a number of brands have reached out to us telling us they want to partner with Airbnb, not just because of the traffic we have, but also because of the strength of our brand. So we think that there's a myriad of opportunities of partnership. Now on the buy, we're going to have a very high bar for ROI for acquisitions. We've done a number of acquisitions in the past. Some have been very successful. And with our free cash flow, we have generated $3.8 billion in free cash flow. We absolutely have the cash and obviously the currency of our stock to make acquisitions, but we're going to be very, very thoughtful, and it's always going to be build, then partner, then buy, probably in that order of prioritization.
Your next question comes from the line of Mark Mahaney from Evercore ISI. Your line is open.
Ed, let me try 2 questions. There's some discussion in your shareholder letter about take rates. Take rates have been relatively consistent in the last couple of years. is there any reason to think that pattern won't change, going forwards, or will change going forwards? Is there a reason why take rates would actually go up? And then secondly, Brian, you talked about, the ability to really expand in Asia. And I don't know if I understand the momentum that you've got in Korea. Asia seems like it's generally been a tough market for a lot of, internet companies that try to expand there. And China seems to be relatively off limits. So just talk through a little bit more about why you see grounds for optimism in that region. And I know there's a lot more to Asia than just China, but just wanted to ask that question. Thank you.
Hey, Mark. Yeah, when we do reverse, I'll do Asia, and then Dave will take rate. So, no doubt that internet companies have struggled in Asia. I think in particular they struggled in China, and we do not have a inbound business, a domestic business in China any longer. Although, obviously, there's a lot of stories of companies doing well in other countries in Asia. So let me just talk about why I think Airbnb is unique. The reason why, as you know, is that we're a global travel network. And so, 44% of our nights booked were cross-border. And, if you're in Japan and you want to stay in Germany and you don't want to stay in a hotel, then, where are you going to go? You're going to want to go to a global platform, probably not a Japanese platform. And the reason if you're going to Germany from Japan and you're not going to use a Japanese platform is because the Japanese platform would have to get German homes on that platform. And that is probably not going to happen. And so we think that, we think this is a global market, this is a global network, not a regional network. And one of the things we've noticed is that Airbnb seems to work about as well in every single country that we've entered. There's a big question about Latin America, for example. We were massively underpenetrated. And there was a question, well, this is an emerging market. Will Latin America work well? And then, of course, Brazil, Ecuador, Peru have grown very, very quickly. And also I just say the success of Korea has been phenomenal. And the other thing is that the population in Asia is generally younger than the population in Europe and North America. And the other thing we know is that young people tend to gravitate more to Airbnb than older cohorts. So I just think the amount of people that are mobile applications, that are young, where Airbnb, they're not predisposed to book a hotel, the strength of network effects, the fact that there's going to be really strong cross-border travel, and Airbnb is a cross-border network, are all the reasons why I think Asia will be no different than any other region on Airbnb. It might just take a little bit more time. Dave?
Yeah, and then, Mark, in terms of take rates, no, there should be consistent. There's no real reason why they should be going up on kind of a time-adjusted basis. We've not maturely changed our pricing as a percentage of GBV when you adjust for the timing. So, we are testing the cross-currency fee, as we mentioned earlier in the call, but you shouldn't count that as a major expansion of fees this year. In Q1, the implied take rate, revenue over gross booking value, it's going to be higher, but then again, that's largely due to timing, right? A little more revenue coming in Q1, largely due to the Easter timing. So now longer term, I am excited about the opportunity for revenue driving with our experiences and services, and that ability to drive incremental revenue and incremental margin. So over a longer period of time, I think our margin expansion will absolutely come from hosting guest services and experiences, but here in the short term, there's no real change on a time-adjusted basis for these.
Again, if you'd like to ask a question, press *1 on your telephone keypad. Your next question comes from the line of Alex Brignall from Redburn Atlantic. Your line is open.
Good evening. Thank you very much for taking the question. First one would just be on the Q1 guide, just trying to understand what you're implying on the take rate expansion, because there's obviously one comment which is Easter timing, which is 1 to 2% on revenue, but it seems like the comment of notably higher take rates would be more than just 1 to 2% extra on the revenue. So if you just piece that out, and then obviously it feeds back into the room nights. And the second one, just in terms of a little bit more detail on the cross-currency, it sounds like what you're saying is that it now is another lever that you have, which is fantastic, but it's something that you're going to test with. Is there an amount of friction that you expect when you add it? Do people have the chance to not pay the fee? Where will it be displayed to consumers? And your last comment, Dave, on the take rate not expanding, but presumably that means that in terms of its contribution to take rate, it's going to be relatively immaterial. Thank you so much.
Yeah, so the tour is the reason why we say the take rate expansion Q1 is because there's a double hit. You have the increased revenue in Q1 due to the timing, and you have decreased gross booking value that shifts from Q1 to Q2. So you both increase revenue and decrease gross booking values in the period by some amount, say 100 to 200 basis points, and then you get that greater expansion of fees, revenue over gross booking value. So that's why we give the guidance that way. Yeah, in terms of cross currency, we're going to be testing it. We'll be launching it in April. We need to understand what the impact is to demand overall. I mean, if you just step back to it, it's actually a unique capability that the vast majority of other platforms either don't have or they charge a substantial premium for. So we've been largely giving away this benefit for no incremental cost, and we were just monitoring and have the capability of adjusting that fee if we so chose. And we'll be mindful about it to make sure that we're thoughtful in terms of the impact on overall demand.
We have reached the end of our question and answer session. I will now turn the call back over to Mr. Brian Chesky for some closing remarks.
All right. Well, thanks everyone for joining us today. Just to recap, revenue was another incredibly strong quarter. Revenue was $2.2 billion, 70% higher. Adjusted net income and adjusted EBITDA were both Q4 records, and our trailing 12-month free cash flow is $2.8 billion. And this, of course, represents a free cash flow margin of 39%. I'm really proud of what we've been able to accomplish this past year, and there's more to come. 2024 marks the beginning of a new chapter for Airbnb, and I look forward to sharing more throughout the year. Thank you all very much.
This concludes today's conference call. Thank you for your participation. You may now disconnect.
Please wait. The conference will begin shortly.
Hopefully that was enjoyable, useful. Hopefully you liked my comments on the chart. Hopefully you could read them. But yeah, interesting to watch it on the minute time scale. I was surprised that at the times when it dipped, and but yeah, I was just thinking. I switched over to the daily chart here and remove those drawings. Let's see, the neckline's right around here. We had returned to, I guess I need to remove all of that text, but yeah, the neckline here, price did drop below that. Actually dropped to these, white lines that I have down here. And so I posed the question, let's see, switch over to the minute time frame again. Broken below neckline could be a buy the dip opportunity, but also added, I am not. I tend to, $20 a share is usually what I go for, at least at this point in my trading career. I get one share and then I'd be, too emotional about it. And so, but yeah, I mean, I feel like the big picture signals are that there's this giant inverse head and shoulders pattern. We've broken above, confirmed, and moved up. And on a pretty red day in the market, managed to stay up for the most part, higher than yesterday's open. And then so right now, we're down 6% in the after hours. But, this was reminding me of PayPal and their earnings call and how, they're really planning on expansion and things like that. And so I feel like maybe that's scare investors a little bit. But their earnings were good. And so they did pull back, but I mean, I can pull that up in a minute, but, and that, I had gotten one share for that. And then I took a few dollar loss on it just cause I didn't want to see it go down to fill gaps. And I thought that's what was going to happen, but it actually regained a lot of what it lost. I haven't seen what it did today though. But so I think that what's going on with Airbnb, I mean, a dip buying opportunity below the neckline, potentially very good if that does play out. But I feel like with the stock market at all-time highs, Bitcoin at all-time highs, it seems pretty precarious. But I do think it's really exciting. They did mention AI and that they're going to be using AI. It seems like they're expanding, to focus more on the experiences aspect of the business, which is something that I've never taken advantage of. But I love Airbnb. That's my preferred way to travel, cheaper than getting a hotel. I live in the Midwest and I go to Chicago occasionally, a few times a year. And, Airbnb is the way to do it. Unless I really want to save some money, I do a hostel. But that's just not that comfortable. And so, yeah, with the Airbnbs, you get the experience of, being in the city. And so that's really nice. Not staying there, but living there, And so now it does look like we're struggling to break above that and hold that 50-minute moving average. And so, yeah, and if you guys want, I can stay watching this and just kind of provide commentary. But also, I'm happy to switch over to GDX, gold, and also just curious to look at PayPal. So, I can pull those up while we watch this, and then we can switch over to them if you guys want. But I also, want to make sure this focuses on Airbnb. But I am happy to take requests. I will be doing videos on, let's see, Neo, I believe SoFi, and then also Coinbase tonight. And on days when I don't stream, I think I will do, I named it rough cut requests. I might rename it as uncut requests, kind of thinking about, uncut gems, and that, we like to hold our diamonds. And so, kind of a play on, the Netflix movie with Adam Sandler. And so, yeah, I think I might do that. I might do rough cut, uncut analysis whenever I don't stream, just to give you guys a little bit more content, but then also try to do more polished stuff over the course of the week. So I will add GDX on here, and I will add AAAU, and then also I'm curious to look at PayPal. But yeah, if you guys, you can let me know in the chat if you want me to flip over to those and I can come back to Airbnb, or if you want me to stay on Airbnb. This, stream is, for Airbnb, but also it's a nice 2-for-1 to get some requests if we do want to look over at other stocks. And yeah, and I think that's pretty cool. I've never done this. I usually do analysis on the daily time frame when markets closed, and basically when I'm done with work. And so it's really cool to just see, thinking about technical levels and stuff being respected potentially, in this process. So I thought it was really cool. Saw this consolidation following a down move. Thinking, we were respecting, this lowest open really right here. And so I was thinking that could be a bottom signal, but it could also be a bear flag. And so we did see, a rejection from this. This candle here was a sign that, we wicked up, got rejected, and then this red candle, clear, this is a bear flag. And then we saw it break down here. But then I thought, oh, well, if this is below that neckline, I don't think that inverse head and shoulders pattern is just going to break down. But it could around earnings. But I saw, oh, maybe it's forming a bottom here, and that could be a dip buying opportunity. This could, of course, go down, once market opens, maybe in the pre-market. So this might be a very bad opportunity to buy. Who knows? But then going up from there, wondering if it break above the 20-minute moving average, or doing this retracement real quick, the 618, if it would come back down to that. That did not happen. Showing strength, but then rejection. And that, I should say, showing strength with 2 closes above. We couldn't really get 2 clear closes above. This one was a pretty weak close above with that little red doji there. And then, yeah, but then now we're getting this convergence here of those 2 moving averages. So with that 21-minute crossing over the 50-minute, that is a bullish sign, or really that is kind of a lagging indicator that price has been going up. But, if that momentum is maintained, then we potentially go up to the 200-minute moving average. And so these are typically, used for the daily moving averages, but I'm just looking at the minute time frame for earnings because it's so volatile around that. And so, yeah, I just think it's really interesting to follow that. And like, if I, were to be trading this, if I had, enough money to be trading this and not, be emotional about it, didn't have money tied up in other things, this would have been, oh yeah, I'll buy the dip. And then, from that, even just to right now, what percentage up is that? It's up 3%, nothing crazy. But that could potentially get back to, these levels. I mean, this could be like a foreshadowing of what's to come. But this is just, a sell-off, bringing the price down because it's clear that there's this inverse head and shoulders pattern. Oh, but what can we do? We can get people to FOMO in up here and then draw price down. And then they sell down here, seeing that it broke the neckline. That's when we get in. That's when we move the price up. Composite band, something like that. And the big players on Wall Street manipulating this to exploit retail for their emotions. But yeah, I mean, I'm very curious, I guess, to see how price opens relative to these lines tomorrow, and if that was a clear buy the dip opportunity. So yeah, I think that's pretty cool. But yeah, I mean, if I'm not seeing any comments wanting me to stay on this, I might switch over to PayPal to look at real quick. It does look like it was red on the day. And then look over at gold miners and gold. So I'll probably do that and switch over to the, the daily time frame for those. But yeah, so like PayPal, this is on the minute time frame. But then if we switch over to the daily, I'm actually going to remove these moving averages. Wow, I've got a lot of stuff up here. But yeah, I mean, it's just going to, let's see, what does it seem like it's bumping into? Yeah, I mean, both the white and yellow there. But yeah, it's just a little cluttered, so I'll delete the yellow one. And so, yeah, I mean, it does look like, well, and I can undo. And so that was the 618, did move back up to the 618 from this bottom. But really, I mean, from this retracement, where is it going down to? Where is it finding support? It does look like, it potentially found support around this 618 here. But does look like it got rejected from this orange downtrend, which is the top of the wedge. But yeah, I mean, following earnings, though, I mean, there was a pretty big sell-off, but then opportunity to exit, potentially. I mean, maybe this will continue higher. I think today there was a lot of overreaction with sell-off and stuff like that. I was kind of surprised by that, but I didn't really pay too close attention. Yeah, I'm trying to, last week when I was working the night shift, I was sleeping when the market was open, and I think it was really good, like rather than, oh, my buy order was filled and price is down, I'll place another buy order. Instead, what I did, because I was sleeping, I reassessed the chart every evening, just like I do in these videos, and it's like, oh, okay, it dipped to this level. Now, I'll place my next buy order at the next level down, and maybe it gets filled, maybe it doesn't, but it paces my dollar cost averaging. And yeah, so I feel like it's good for me at least to not be, to trade based on the daily charts. And so intraday, just sit on the sidelines and see what happens. But yeah, like, we saw PayPal gap down a bunch, this is gap down 11%. Let's see, what would that be like with Airbnb coming from, yeah, it's going to be a pretty big, so down, so from the close here down to there, that's like 7% to that low, but if price is at 44, that's right around here, so that's what percentage is that? Yeah, it's about 4.5%. So not as bad as it could be, considering what happened with PayPal. And I do think that, if price is opening, at the current price, that is, right around that neckline. And so I think that's, just another retest. But it could also be, maybe it is that, this was a double top pattern that we're seeing. And so, while it did respect this neckline, it just kind of needed another test of it following this double top. And I guess really that does kind of make sense with uncertainty around earnings. But yeah, I will switch over to gold miners. Yeah, and so this, this has been really tough for me to make videos on because, I point out that it does look like there's this head and shoulders, but I don't really know how often those things play out. And seeing that measurement, bringing price down to, $22, that seems a little extreme. And also, gold miners index, this GDX was introduced to me from Gareth Soloway's game plans. And, he really knows what he's talking about, but also with any of these commodity ETFs, gold miners, gold, silver, not natural gas, but, the metals and stuff, that is more, buy now and hold long term. If we do go into a recession, these are going to be safe havens. But, this could be coming down to, I don't think it's going to come down to 22, but it could be coming down to 25. I do have this alert at 27. And so it could be, coming to test that. Let's see that. I guess I did that on the weekly. Yeah, it could be coming down to test this trend line. And so that might be the opportunity to buy. So something to consider. And, that would really be like, buying the dip with conviction for, this being a long-term play and not a month, swing it in the next month or so, but just kind of accumulating over time. And so I have not been doing that with gold miners, but I have been doing that with gold. I actually did, I think I have, I'm not sure, maybe between 6 or 8 shares, so nothing crazy, but just kind of accumulating over time. And I actually sold 1 share today, just to trim at break even, and then I bought back lower. And that was just based on limit orders that I had set. And, that's nothing crazy, but that will, over time get my average down. And so with this, I feel like this is, we see bigger picture. I don't really see this, but Gareth Soloway sees, left shoulder, head, right shoulder here, and also with the possibility of recession, and money's going to be moving out of banks, out of the S&P if, we're topping around now, and that's going to move into something like gold. And so this, while we do see this inverse head and shoulders here, we also do see a cup and a handle here. So this downtrend right here, that is actually, a bullish consolidation pattern. So let's see. Ooh, sorry if I don't have a list, but sometimes I think it sounds like I do, at least with the recording. But yeah, so that's, that's the handle of that cup. And that could be suggesting that, pretty much flat in the after hours, but that could be suggesting that we might be breaking out. It's just, this is a time to accumulate, really. Yeah, gold did just recently hit an all-time high, $20.64, at least for the AAAU, AAAU. And it would look the same with GLD. But just it'd be more than $20 a share. But yeah, I might switch back to Airbnb. This is at 43, right? Below 44. Below 44. So if we look at this, put the moving averages back up. Yeah, it's broken below both of them now. And so that's, one of the things why I don't really like the moving averages, because you do see, this crossover. That's bullish, but it's really like, it shows that price went up in the past. But yeah, you're welcome, Dang. I'm not sure what you're referring to, but yeah, these, I think that overall the chart for Airbnb does look bullish, but it seems like, I guess I could pull up the SPX, see what that did today. But yeah, now below, this is the 1 minute. Let's see, daily. Now below the 5,000. Did get a high today, all-time high. Actually, I might remove these drawings just so we can see that better. So yeah, this day, which was, let's see. Yeah, oh, okay, yeah, so this is, I was looking at the wrong candle. But yeah, that's, so I'm getting better with my signals and stuff. And so this to me, topping tail, that is really based on, if you're hitting an all-time high, and I believe you close in the bottom half or bottom quarter or third of the trading of that day, that is what a topping tail is. So it's not just any wick that's up. You really have to be closing near the bottom. And so we did see that, but with the open and close being, just $5 off, that it's really just kind of like a doji, and you really want to see more red than that, more of a move down for that to be, oh, okay, that's a clear topping signal. And so, but this is a topping signal. It could just be more bearish. And then what we see today, this, with this gap here, and, seeing that 21-day moving average there, so far we've respected that. And so what this could be a reversal signal then to the upside, that this was an overreaction in the market today. Although, it is below 5,000. This is a hammer candle suggesting that this could be a bounce. Buyers stepped in below this price. And so that could potentially be going back up to fill this gap. And then also, this is the low from the end of October. This is something that Gareth Soloway has shown in his game plans. He didn't draw it live, but he showed it. And so I think that we could draw a... got all my drawings up there now. From the low here, and just connecting, basically to this low here. I'll make the line just right. And so let's see, that's the... Okay, I can see that low, and so I can adjust that to that price exactly of 3.78. And then here with this low of, let's see, 471482, 471482, 471482. Sorry if that was annoying. But yeah, so we have that locked in place. We have not seen any price action below this level other than today. Pretty remarkable. But we did not get a close below this level. We need to see two closes below to confirm the breakout, two clear closes below, or a breakdown, I should say. And so this could just be, and what I did I could pull it up on the channel, just my thoughts on what's going on with the market as far as S&P 500 closing above 5,000 over the weekend. Lots of news coverage on that. Bitcoin closing above 50,000. Now I believe being below. I'll pull that up before I pull up this post that I had on the channel. But yeah, I mean, it's this, we need to get a close above 50.4 thousand to suggest continuation. This pullback, this hammer could suggest that this is a top, that we're not able to, but this candle isn't closed for the day. But we could be seeing a top here, but I view that there's going to be a pullback in, and that we might have just seen that today in Bitcoin as well as, the broader market. And I'll pull up why. I was just thinking about this during my lunch break at work. And so let's see if I go to the channel here. Look, we're live. So let's see, I want to pull up the community tab. And I posted this, just me thinking about this, so make headlines with the S&P 500 and the market in general, and Bitcoin closing above 5,000 and 50K, respectively. So that gets a lot of eyes. Looking at the market, it's all-time highs. It's not going to stop going up. I've got to buy. And then, so people start looking at it thinking, oh, I should buy it. And then price drops. So people either panic sell or they buy the dip. And so those people who see the price, up here, start to, buy the dip, and then price drives up, gets driven back up. Hasn't happened yet. And then so people who either panic sold or, didn't step in, FOMO into plays. And then after that, that's when you get the rug pull. And that's really just, manipulating people into establishing positions at an all-time high, getting these emotions going. And then that's when the rug pull happens. And, Wall Street, whoever, the big players can offload their shares at the high. Jeff Bezos just did that with Amazon, and he had done that before, marking a top. He's a pretty smart guy. And so I feel like, just with these, just like with Jim Cramer, stuff like that, all of this stuff, is just manipulating people into buying Bear Stearns, the Lehman Brothers, right before they tank. And so I feel like making headlines over a weekend about these things, hitting all-time highs, closing at all-time highs, or, I should say Bitcoin, not at all-time highs, but new cycle highs. And, so I feel like the top is near, and I will be doing a video tomorrow on shorting the market. Somebody actually commented, laughing at me, "Oh, you've been posting about this for a while." And, it's like, yeah, you can never time the top. And so we had broken above here. And so I probably started shorting around here, but it's not like these aren't short positions where, I'm really going to lose a lot of money. I'm not going to lose infinite amount of money on them. It's just, slowly building a position with the expectation that over time, I will have built a large enough of position so I can actually make a good amount of money once we've hit the top, and also recognizing that, you're never going to be able to time the top. Maybe we've hit the top already, but, I do think that we're going to get another test of it. And will I load a lot there? I'll probably buy a little bit more aggressively than, the weekly one share buy. And I actually, the SPXU, I just got one share of that because I just learned about it. But I'm, going to look at it now. Yeah. So, yes, we did get this. Let's see if I remove these drawings. This, suggests to me that that's going to be short-lived, and that we will be pulling back. So I was thinking, during the market today that, I should add a little bit more to that position. But now looking at this, it's like, nah, it's good that I was patient. I think that, I may not be able to get an opportunity to buy at 70.34 again, but I do think it might be returning to these levels. Actually, I do think that I'll be able to get maybe $7. I do think that's feasible with this, but it could, go lower than that as, the market might be, hitting new all-time highs again, but, you're just never going to be able to time the market. And, so it's really like you do want to be establishing positions, or, I need to get better at practicing establishing positions once that top signal is in, with the market, and that's when you'd want to short, or once that bottom signal is in, that's when you want to buy. And so that with those signals being in, you're not going to be buying the absolute bottom. You're not going to be selling the absolute top. But, you have to wait for those signals if you want to, and that also saves time too. You expect that, let's see, we, hit all-time highs, or maybe I don't think that we're going to get there. You start establishing a position here, but then it's like you're wasting time in that, investing at the top. But I, invest very slowly, so I'm not too concerned about that. But once we do see like a break of this uptrend, which I'll include in the video tomorrow, we did see a pierce of it, but we have not seen a close below, which would suggest weakness. 2 closes below would suggest confirmation of the break, and that price would go lower. And so we have not seen that, but we have seen a test of it, the first time getting any price action below this trend line since we began to form it based on this low being the pivot point, the low of October 27th, and then the low here of January 17th. We have not seen any price action below that line other than today, but we have not confirmed the breakdown. So this could be, a sign of, early shorts jumping on board. I'm an early short, I guess, but I'm not, shorting with an ETF rather than actually having shorts. so this is, oh, it did dip below that line, shorts pile on, but we don't see confirmation. We need to wait for confirmation. And then really, and so for my slow dollar cost average build a position on like SPXU, SH, SQQQ, and SOXS, that is really just, slowly kind of dollar cost averaging. Maybe I can get some more shares at a discount, when the SPX, when S&P 500, the market is up here. But then ultimately it's like once this line is broken, then we might be able to start to see, a test of these levels to the downside. I do think that we'll bump into resistance around 4,800 because that was the previous all-time high. But I do think that we see these gaps to the downside. And I do think that there's a lot of potential to make money on those moves down, whether you'd want to hold all the way down to, these levels, or, just do a trim, over the course of time. But yeah, I think it's really interesting what's going on with the market. And just thinking about it psychologically, trying to not jump into things too early, or slowly, ease into things, perhaps too early, but easing into them. 58, yeah, look at this. We missed all of this price action. But looking at this on the, this is, PayPal, sorry, PayPal. Dang it, no, PayPal. I want to look at, there's no price action. It's, well, actually, yeah, potentially. Let's look at those moving averages. Retesting now, the 50 moving average, got them closer together. So maybe this is showing some strength here that, break above them and maybe get back to the price that we closed at, $150.82, marked by the red line here and over here. So, yeah, it's really, really tricky to see, to predict what's going on with the market or with a stock during earnings after the market closes. But yeah, this was a, get people to FOMO in, and this is a buy the dip opportunity, in my opinion. But I don't hold a position in it. I just find it, requested and always really curious to go over stocks. Hey, more money. I have some news for you. You were suggesting some of those crazy ones a couple days ago. Is that right? I will look at. Oh, I'm typing it into the comments. I need to type it over here. But yeah, let's see. You were suggesting. This one. I'm going to look at that. I made a very small amount of money on that. Could have made a lot more. But I, lowered my risk. And I'll go over that. I'll first look at VZIO as you requested. So yeah, I'll look at it the daily first. What is VZIO? Engage in delivering entertainment lifestyle enhancements that make its products the center of the connected home. Oh man, what's going on there? Daily time frame. Wow. Yeah, the small amount of money that I made was less than less than $1. But it was, place the order and then, place the sell order. I could have made multiple dollars with it, but yeah, actually, I guess I'll show that real quick and then I'll do this. So just looking at this on the daily, well, actually, I'll switch it over to the hourly. So yeah, like, this had run up and then kind of consolidated here. This was, let's see. Oh, that's market hours. So yeah, this over here, this had, consolidated. I think it closed the after hours at 225. So I placed an order to buy at 225. That got canceled for some reason. So in the pre-market, I just bought at the price of 231, and I was just thinking, oh, well, the high here was $3. Or I thought it was, oh yeah, the high here was $3. And I was just thinking, maybe it goes back up to there. I don't want to risk it. It's just one share, so nothing too risky. Would have been fine losing it. And so I just placed a limit sell at $3. But yeah, this went up to $9.57, so I could have made, like $7 on it. So nothing crazy to win, but that's just a crazy play. But now it's back at $2.67, so You made, I'm just going to type this. You made money trading BGLC today, $300. Nice work. I'll have to look at that as well, but I'll first go over VZIO. BGLC. Yeah, so I have actually, one of the more volatile trades that I've been in was during Airbnb earnings, or not earnings, IPO. I had bought way too large of a position, and it was just so volatile. And I think that was a good lesson for me. For me, that's more like the rush you get from gambling and stuff. And I will lose a lot of money doing that, the way that I manage emotions and stuff. So I try to do things a little bit slower, calmer. That's why I look at the daily candles and stuff. But yeah, this is pretty crazy. So up almost 25% on the day with a nice dip opportunity before that. RSI at 81. This, nice pullback, but I do think that this is not really up, not too much going on in the after hours. Was there news associated with Walmart could buy TV maker VZIO? Reports say it's an advertising play. Yeah, so this could be really good. It could also be, at this point maybe sell the rumor, but I didn't know about it, so there could be late buyers. Yeah, I could see that. Actually, this being, a less than $20 stock. And yeah, I don't like do that. Yeah, but it is consolidating up here, so that suggests this could be a bull flag. This is on the hourly time frame. We can go to the 10-minute maybe. Yeah. Gap up. To me, it's like, it's really interesting how, like, I'm actually curious, how do you find these plays? Because is it just based on, what's really volatile, and you check out the things that go up a lot and then inspect them to see if they're potential to continue going up? Yeah, because this stuff, like, I would look for something like this because it's like, oh, it went up 25%. Maybe I could make a video on it. Maybe somebody's really intrigued by it, get a lot of views. But so far, with the schedule that I've put together, I'm covering a lot of stuff that tends to get a good amount of views. So tough to keep up on it. But yeah, this, I find it really impressive that it's just held this level, 975. And, and that could be, maybe, it popped a little premature. And so there's this pullback, this is me thinking about it psychologically. And there's this pullback, and it's like, let's hold price at these levels. So, we can place the orders tomorrow. Or, yeah, like it's going up, but then it's pulled back crazy. This is just, ranging from, let's see. This is going from, there's like less than 10%, 10 cent ranges on these candles. So that's pretty remarkable how it's just staying flat. Looking at the 1 minute. Yeah, look at that. From StockTwits. Cool. Yeah, I think I might actually have StockTwits on my phone during the pandemic when I was getting into, trading and stuff. But I stopped checking it. I haven't checked it in a while. Yeah, so this is, this is intriguing to, like, buy one share. It does seem like, this is still like rumor phrased as, I don't know if this is I think it'll pop up here. Yeah. Walmart could, not is going to, could buy TV maker VZIO, reports say. It's an advertising play. Yeah, following reports that Walmart was in talks to buy the company out for $2 billion. And so this could be, yeah, this is really just rumor right now. And so it's waiting for the news. Is Walmart going to buy them? It goes up and then you sell the news. Or, they don't, and then it comes down. I could see that as a a smart move for Walmart. I don't know if they have other TV brands and stuff. But yeah, I mean, VZIO, I was wondering, how do I know that name? And I think my brother used to have a VZIO TV, and I think that they, yeah, he doesn't have it anymore, but I was always intrigued by that TV. So it seems like it's a good, like, universal and, known TV, and for Walmart to buy that. Yeah, and just seeing price held here, I feel like it's going to be going up more based on that. Yeah, quick information on stocks on the move for StockTwits. Yeah, I'll have to check in on them, but I feel like, it's crazy. Like, since doing this channel really over the past month, it's just been like, what am I doing? I'm just focusing on the stocks that are on the schedule, and then, whatever's requested. And so, like, I earlier in the channel, I would go on Reddit and stuff and kind of explore that, but now it's just like, I've got the schedule, and people are kind of like expecting me to do follow-up videos. Yeah, like I need either more free time or somebody to like be like researching all this stuff. And then, yeah, I mean, I just need more time. I need to be able to quit my job and just focus on this. Yep, going up after hours, 4 cents, but I suspect it will pull back. And what I might do, I'm intrigued by this, with the expectation I might lose a couple bucks if it goes back to 742. I might, just for fun, because of, what you suggested last time was a interesting play, I might, let's see, just for fun. Might place an order for $9.75 just for one share, and then I'd probably place a limit order, but I'll probably be a little more greedy than I was last time. But yeah, I mean, even if it just goes up to 11.22, that's a more than 10% swing, in and out, easy. Yeah, because it's like, always, you're never going to be selling the top, especially with stuff like this. Yeah, I mean, like looking at a MGIH, how, I could have sold, much higher than I did. But, how do you know? Oh, it's like up to here, and then it's like, oh, I'll sell at 10. It doesn't get to 10. You're saying BGLC is a fantastic play today? Oh, yeah, because you made money on it today. So you think the play's over, or? Yeah, pull back. Oh, so I'm glad you got out of it then. Green on the day, but pulling back 25% after hours down to 118, which is still... Damn. Yeah, that's still in the green candle here. 118. But yeah, from that... high here, the close here, down 18%, or is that down 24%? It's right around to there. That's about where price is, a little bit lower. And yeah, let's see, 10-minute time frame. Yeah, congrats. Oh yeah, and this is also like, you see the squeeze and consolidation after hours, continuation higher, and then really you get the exit. Can I ask what your average was on that, just to like see about, taking a measurement from like here up to the top? That's, damn, a 300% move. So yeah, I mean, with something like VZIO, it's like, maybe do, you think 100%? That'd be, making $10. Let's see. Yeah, I mean, what would 100% bring it to? What are some levels here that this maybe would go to tomorrow if it did squeeze? I could see there being some resistance over here. Around $18. If we throw up the volume profile, that's exactly what you see there. So I could see this going up to around that, which would be, I mean, maybe it'd squeeze up to 18, but going up to 86% move from where it closed at. Yeah. Let's see. So, I mean, that's pretty good. That's going up to, oh yeah, that is 18 bucks. What did I, 100% would be like 19, yeah, 60. So, yeah. Because, yeah, I mean, it also, too, I mean, it closed above this little volume shelf here, looking at it a bit more big picture. So I guess, yeah, maybe it'd bump into a little bit of resistance here with this consolidation over here. Let's see, look at this on the weekly time frame. Yeah, I think that, you know, could potentially go to 18 bucks tomorrow if it is to squeeze up. I'm just going to type up because I can't see the other one. BIOR, INTS. I'll pull those up here. Yeah, so BIOR. Let's see, this is on the weekly. Don't want that too much. Yeah, I've been surprised by this because, you know, this channel that I've drawn, I have not adjusted it from these points. You know, it's quite possible that, you know, maybe I'd want to adjust it so it does include, you know, these excursions. But yeah, I mean, we're just hanging out on the outside of it. You know, maybe that is, you know, I don't want to necessarily draw a new channel. I do like how, you know, like this historical significance of this channel, but maybe I want to draw another one. And let's see, parallel, maybe I could do pivot high here, and then pivot low there. And I'm just going to adjust these so they are, and I might actually make that dashed line so we can see it a little better. I'm just going to adjust this so it is right on the highs there. So that's high of $5.15 for that one. Make it just right. And I'm actually going to lock this so I don't nudge it. And then the other pivot high is, let's see, $2.71.3. $71.3. And this low, I guess it's just $2. $2, okay. And so from that, just make this exactly 2. And I'm actually going to make it a dashed line just so, or maybe, yeah. Okay, so we can see that price has not, the only time price has gone outside of that channel has been this blip up here. And so if we look at that, yeah, we are still trading within that. And so I find that to be pretty interesting, that we really need to see price getting above this. And it did close below this 786. However, you know, that's, you know, it's not confirmation. We need to get 2 closes below it. So I'd be really interesting to see what price we close at tomorrow. Ideally, you know, above 82 cents tomorrow. But, you know, this line is at 81.04 cents. And so it would be good if we could hold that. And this, you know, is maybe a dip buying opportunity with this tail down. But we could be retesting 75.6 cents. And then I'll look at INTS real quick. But yeah, I mean, this, I feel like BIOR, you know, they're doing their clinical trials now. And then I think, I'm not sure exactly how it works, but I think in April, they'll be reporting results of that. And if they're good, which I'm hoping that they are, that price really goes up a lot, similar to how we saw this squeeze here. But then I would think that that's more, you know, there's less uncertainty because the trials have passed. And so it's like, okay, now it's good. And this whole time has just been bleeding out retail who've just lost confidence, who, FOMO'd in on this after hours run up. And so, yeah, this is just driving price down, boring people out of positions. And I think that they will be moving up a lot when they do release results from their clinical trials. So yeah, I mean, I do think, biopharmaceutical companies are like notorious for big squeezes following drawdowns, I believe, during clinical trials. And then once they release results, once they're granted full, approval of their drugs from the device that they're working on, that this could go up a lot higher. And I think there's a lot of potential with this. Even, I mean, just in this time frame. So, I mean, I'm not sweating it. I haven't bought the dip in a little while. If it does go down to 75.60, it depends on how much cash I have on the sidelines, but I'd probably pick up 100 shares at that price. Just to, add to my position. And then, I'll look up INTS. And so this, did go did go to 315. It now below $3. That's a psychological level. We do have here, if I pull up the volume profile. Oh, I do have it up there. Dang it. Let's see. Where did I removed it? Volume profile. There we go. Let's see. And so, yeah, I mean, we do see a little bit of a lip here. It's kind of obscured by this. But yeah, there is a volume lip there. And so price could be going down. Yeah, right around current price. Because we got this consolidation here. Hopefully that serves as support. We did get a dip below 30 as far as the RSI goes. And so, yeah, I mean, I think that you just want to see maintaining closes ideally above $3, but you just don't want to put in lower closes at this point. So 297, that's a level to keep an eye on. But yeah, like, I mean, you just see that consolidation there. I feel like that is potential support that we, corresponding with this volume shelf here. So really, like, if we do see dips below 297, we want to see closes at or above that level. And so, yeah, I mean, this wick down could be a bottom signal or the beginning of a bottom signal. Need to really see confirmation for there to be a bottom signal. And so otherwise, I mean, if, like buying at the low here of 267, that would be, kind of potentially a falling knife, buying a falling knife because, any of these wicks down here, you just saw price continue to go down. Especially with this hammer signal at the top after this run up, you get this spinning top here that suggests indecision, and then you get this hammer candle that suggests reversal, and then you do get a reversal of that recent up move. And actually from that up move, I could do a retracement. Here, I'm just going to add the levels to it before I actually draw it. Might actually do the 2168 on that. And so, yeah, I mean, if I draw this from, the low here, what is that low? 410. So if I can get that just right, probably going to be difficult to get it just right. Pretty close. Oops, and I didn't have the tool I wanted. So 410, just about right there. And then this high is 516. So I'm going to be a few cents off there either way. And so, yeah, the reason why I added the 2618 is because I was thinking that it'd be below the 1618. I probably had that in the video or the recent, I feel like I would have. But the 2618, I'm going to actually adjust this. I do see the other comments, and I will get to them in just a second. I just want to adjust this to be just right. So it's a little more useful. So that's 10 there, and this is 16. Oops. 16, lock that. And so, yeah, this 2618 is at a price of, $2.38.5 or $2.39. Maybe it doesn't get touched exactly. But that could be, if we do see a close again tomorrow at or below 297. That could suggest further downside, and maybe this extension from this retracement at $2.38.5, $2.40. Maybe it doesn't get hit exactly, but maybe it does. So yeah, I mean that could be a level where support is found if $3.50 is not that. And let's see, $2.38, 39 cents. Yeah, that would make sense here looking at the chart. We do see, this consolidation at the bottom there. And so that would be kind of like the last level of support, to find based on the consolidation there. And then, price could potentially break to hit new lows going below $2.01. So I believe that's a 52-week low, all-time low. So yeah, it's getting into dangerous territory. And so I think that, this, I'd say you just want to be waiting to see confirmation of that this is not breaking below 315, get a reclaim of that, or, just holding 297 as the lowest close for this downtrend. But, if it does consolidate, that could be a bear flag. So good to be cautious of that. But I could see this going down further to $2.38.5 at this 2618 extension from this retracement here. But yeah, I'm going to get to the other comments here. Okay, so BGLC. I'm just going to go over this to look at the massive move. So from 76 cents, what was the high yesterday? The high was, 41. So yeah, even in buying in this gap, from, even if you would have held, if you would have diamond handed this, that's, you're still up. I mean, maybe it could continue going, but maybe this, selling up there. I get the measurement tool here. So like from 78 cents right there up to the high. Yeah, that's over 330% move to the high. Of course, you're never going to sell it. But yeah, that's a pretty cool move. That's impressive. Yeah. Congrats. And and then so I'm going to go on to the, oops, I don't want the moving averages. I want the volume profile to go away. I'm going to go on to the other tickers that are requested here. BIOR, INTS, BGLC got in at 78, shares 220. Nice work. Yeah, that's impressive. Chris, are you asking me to look over ticker symbol TMR, or is that short for tomorrow? My take on Airbnb for tomorrow is that, really, we want to see it an open above right around where it's currently at, because that's 144. Really, we'd like to see it a little bit higher. And that I'm just going to delete my comments here. I hope people aren't attached to them. It was fun to do that during the stream. I'll have to try doing something like that for the Coinbase earnings call, unless they have a webcast that we want to be viewing. But yeah, and I'll delete this retracement as well. So price dipped down to here. I kind of suggested maybe that's a good dip buying opportunity. Price is now, right around 144, which is below the neckline. Price has dipped below the neckline, getting multiple opens below, getting 3 closes below that. But it's an approximate neckline. You could adjust it a little bit, I'm sure. But yeah, I do feel like this bigger picture inverse head and shoulders is at play. Perhaps one might notice, this could be a double top pattern on the shorter time scale. I think that's going to be less significant than the bigger picture inverse head and shoulders. And so I could see this, taking off as long as it really holds above these levels. And, what we saw with, with PayPal following earnings is there was a gap down And I was expecting these gaps down here to be filled, but instead we saw price climb back up, did get rejection around this downtrend, which is the top of a wedge. I did suggest that might happen. It just really needs a lot of power, to be breaking through not only this level, but also this yellow downtrend as well. And so I think that, if there is a gap down that we see tomorrow, which I suspect that we will with Airbnb, I think it could retrace a lot of those gains. And I do think, they had mentioned it multiple times in the call that, if you have 10 people looking for accommodations, 1 out of 10 are going to go with Airbnb. The other 9, they're going to go with hotels, more traditional, conventional hosting or, accommodations. And, they're saying that, even if they just went over 1 more, and so they get, rather than 1 out of 10, they get 1 out of 5, that would be doubling basically their, market share. And so I think that's a really interesting way to think about this. There's just, with Airbnb, there's still so much potential with growth. I do think that there has been some pushback as far as, changing kind of dynamics in neighborhoods and things like that. But I do think that, and also I do think this is interesting too. It dipped below to what level? What was the low here? The low here was 141.24. The low that we saw during after hours was right around that. So that to me just makes me think that this, still, is potentially a dip buying opportunity, but at the same time, it's gone up so much from here, and there is, it seems like there are a lot of precarious things going on. I do think that this head and shoulders pattern will play out, and that we'll be seeing prices higher like what we saw during the after hours, with it going up to 167, sorry. So if we look at that from here, going up to 167, basically, I think I did this in the video that I put out. We take a measurement to there, move that up here. I think I said 180, yeah. So 167 is getting pretty close. And so, it's, I don't know. But also, this is a pattern that we're looking at on the daily time frame, and so any after hours pre-market trading, that is, noise. That's nothing from what you would expect to see on the chart based on the daily candles. And so I could still see this being at play, and that, current price is, a buy the dip opportunity, even though it's not, 141. But at the same time, I'm not in it. And I could be completely wrong. It's quite possible that tomorrow we break the neckline and start, going down. So I think it's good to have risk management with this. I guess risk management could be that, the dip that we saw during the after hours to, let's see, what was the low is the dashed line. I'm going to have to switch this over to the 1 minute so we can see that, just the axis here. So the low was 140.89. So I could see that as being, I'm not good with stop losses, but I could see that as, if one wanted to establish a position here, that after hours dip could be, a signal for, that being stop loss level, or, these lows over here, this double bottom here. Because, if we throw up the volume profile, really, actually coming down to this level, that seems like there's, I guess zooming out, I don't know, maybe there's some support there. But if it does break below that, or really start to break below it, like maybe 140 is a good stop loss level, but also maybe that's a psychological level that, could be manipulated. So maybe 139 is a good stop loss level. Because you get below that, it's below 140, which could just be, I'm just going to put my stop loss at around 140. So 139 is just below that. And if price does go to that level, we do still see a good amount of consolidation support here before this real big drop off. 135, and on that note, maybe 135 is, I don't know. It just, you could always lower it and stuff, and then you're just selling at the bottom. But this could be coming down to this shelf. And so, that stop loss could protect you from that. You see this consolidation over here. Yeah, so I mean, maybe 139 or 139 to 141, maybe that's a good stop loss level. And if price does dip to there, maybe you're missing out a buy the dip opportunity, but there's a lot of downside here. So yeah, it's tough. It's tough to know if you get stopped out and then it rallies. I'm not good at that. I don't have much experience with stop losses. That's something I'm still trying to work on. So that's why I'm explaining my thought process with it. Okay, and so I see one more comment from More Money. The Children's Place, a fantastic play. And you're saying, don't miss, brother. I'll have to look it up. It depends on how much it is per share. Oh, what's going on here? Why is it down 31%? Let's look at this on the weekly and remove that volume profile. Oh, is that a double bottom I see? Cool. It did bounce on that double bottom even though it's still red. Yeah, well, this went, how much did it go down yesterday? Down 41% yesterday and then down 31% today. And so from up here, yeah, that's a 50% drop. And so just going back to that level, that's 100% gain. Would that be right if I'm doing the math correct? Approximately 80, 90%. And yeah, it does look like, we got this bottom here, 925. Perfect. And price did respect that, although it did go to 830. Yeah, I guess I'm kind of intrigued by this because I think, with this, man, the lisp, sorry, I hear it in my ears. Let's look at this on the monthly and put that volume profile back up. Yeah, I mean, it's a little precarious, but over here, it also has this, dip there, but then, the all-time low is $4.23. Yeah, but I could see this, I suppose I could see this riding back up to, yeah, left this gap behind. Do you know why? Possible 15 plus tomorrow. Yeah, I could see that. I mean, there is this gap here that's at 18.15, is that right? The low 18.12. Oh, I wanted to change that to 18.12. Not that that really matters. Because really, like a more proper gap fill would be, actually, I guess the gap would be higher than that because, damn, that would be 1902 to fill that gap. Yeah, I'd have to say this is intriguing. But I feel like I can only do like a micro YOLO. Only one. Either VZIO or Children's Place. But yeah. Let's see what was the high over here, going up to 1722 about. High 1709. What was the high today? 1442. Yeah, what's going on with this? Why did it drop so much? Buzz US stocks moved bicycle therapy. Pre-market losers. Yeah. What was it? A downgrade or something? Is that what happens? Children's Place. I don't know if you can see. Try to get it where. Okay, yeah, Children's Place facing financial precariousness, a sell rating analysis. That's from TipRanks. That'll give me a pop-up, so I don't really want that pop-up Chrome window. Yeah, so it looks like can you see it here, just above me? Children's Place price target cut to $13 a share from 24. Yeah, I mean, that's up from right now. So that's bullish. Yeah, there's nothing here other than that headline. A little easier for you guys to read there. Children's Place price target cut to $13 per share from $24 by Telsey Advisory Group. So yeah, even just a swing to $13. That's not bad. Yeah. I mean, I could see that get people panicking, and that also downgrades it to, this double bottom level at 925. And while we did see an open below that level, we haven't seen any closes below it. But that is, lower relative to it. Put this on the weekly. Yeah, it's pretty intriguing. But I must say, I should probably wrap this stream up because I do have 3 videos I need to do, including one on Coinbase, which has earnings on Thursday. So I need to do that. Also, I need to eat a proper dinner. I did not do that yesterday. And I need to do a little bit of cleaning around my place. I'm just spent so much time streaming and making videos. I need to organize my life a little bit. But yeah, still get those 3 videos out, and I will put timestamps on this so you guys can access any of the stuff that any of the tickers I went over easily. And I'm just going to throw this up as routine. Always always appreciate it. Helps the algorithm. And always comment, chat in the live chat. Great to get requests, ticker requests live. And then also, if I'm not streaming, like tomorrow I'm not going to be streaming, if you guys do comment or request, I'll try to do like an uncut request list of any tickers, and then just do it really casual like I do these streams, not edited, so I might say some stupid stuff or fumble with my words. But yeah, I'm going to try to do that. I feel like that's a nice way to get some momentum, because the one that I put out yesterday, it's got more than 100 views. It's been less than 24 hours, so that's pretty cool. But yeah, more money. Yeah, you have a nice evening as well. Anybody else that's here, ding if you're still here. Hopefully the stream was helpful for you around the earnings call. Chris, I don't know if you're still here. I did get a nice comment from you about Airbnb, so hopefully this was helpful. And the Airbnb video from yesterday on Monday did get more than 100 views, so I will be doing a follow-up next Monday on it. And, I'm not working that day, so that should be easy. But yeah, I mean, cranking out as many of these videos as possible, getting pretty close to monetization. Might happen by the end of the month, but I think definitely in March. And, what's that going to mean for me? I'll just share with you guys what that means. And as far as, how much money I make from YouTube, probably not that much until, really the channel grows a lot more. But I want to just plan on focusing on the growth and see where that can take me. Hopefully, this could be my full-time job, or my full-time, only full-time job. And so that would be really cool. I could put more than 40 hours a week on this channel easily. But yeah, I will put timestamps on this. I will put out 3 more videos tonight, and tomorrow I'll pull up the calendar here. So for today, NEO, SoFi, and Coinbase. Tomorrow, shorting the market's actually gotten more views than Tilray or ChargePoint. So I'm going to release them in that order. I do think shorting the market's pretty interesting right now, especially because I don't necessarily think the top's in. I think that we could get a nice pump for a final rug pull. And so I think that'll be a really interesting video. And I do think people will also be laughing at me in it because I've been talking about shorting the market for a while, but just slowly building a position. And then Rocket Lab and Rumble on the 15th. Also going to be streaming Coinbase and doing the normal Thursday night live streams. That's probably going to be my last Thursday night live stream for a little while. I will do Monday next week. I should color this. Actually, I don't have I can drop this here. I can color that. So I know that, on the 26th, I will be doing a live stream, probably in the evening because I'll be able to do that. But then the rest of the week and for weeks following, I won't be able to do evening streams because I'll be at work until basically midnight Eastern time. But I'll at least be able to do some market streams. I'll try to do, the Sunday night normal stream. And then every week I'll try to get at least 2 more additional streams So I'm probably going to change this banner to, Sunday streams at 9 p.m. plus weekdays and try to get some weekdays in. But yeah, I mean, thank you so much for joining. Hopefully this looks, nice that I'm, populating this calendar, doing reoccurring videos. Neo has been pretty popular, so I'm excited to get that one out, do a follow-up on SoFi, and then Coinbase before earnings. Thank you so much for being here. It's so fun to do this. And I will see you in Thursday's stream, whether that's for Coinbase earnings or for the normal 9 p.m. Eastern Sunday stream. Thank you so much for being here. Always great to hang out. Take care, you guys. Have a great